Today in TFC Stock Geek Out, we are going to look again at a company which I think a lot of people personally love using, but the PRC government hates and has led to lots of backholders from buying the dip. Yes, it's Alibaba. This became a deep dive as there is just so much to cover. We didn't really manage to get through it all, but we did manage to go through the general situation in China now, Baba's main business units, and the potential drivers going ahead. Joining me today is Keng. He's primarily on YouTube, so go find him there, and he is a self-proclaimed Alibaba evangelist. That sounds slightly wrong, but rest assured, he has looked long and hard at the company and built his conviction the old-fashioned way. You'll hear us disagree on quite a bit about Alibaba, to be honest, but hopefully that does broaden the available perspectives and helps you understand the company better. For reference, this episode was recorded on 12th March 2022. Our discussion today is solely for entertainment and education purposes only. It does not serve as any form of advice or recommendations. Thank you for loving what we do and empowering us financially to do more for you. Let's geek out! Hi coconuts, welcome to another episode of Stock Geek Out. Today we are going to talk about a company that everybody knows, right? Especially in Singapore, Alibaba. And to walk us through this, we have Keng. Hi Keng.
Hi Anthony.
Why don't you tell us a bit more about yourself and where we can find you?
Sure. My name is Keng. My YouTube handle, I think you can just type in my name, Chikeng. You should be able to locate me. And then all things covered, I think most of my content really revolves around just one company. And personally, on a allocation level, on my portfolio, a huge part or a huge chunk is in Alibaba. And the more I look into the company, the more I like it.
To me, Baba, the first thing I think of is Taobao and e-com, right? And of course, there's also other things, right? Why don't you bring us through a bit? What's their e-commerce business like? How's it performing? Things like that.
Just nice. I think based on the date of this recording, we also recently just ended their recent quarter, which was back in 2021. And then I think at least from the Singapore's perspective, I think most of us are quite familiar with Taobao and also Lazada. So both of these arms are owned by Alibaba Group. And Taobao is more focused in the China aspect of things, while Lazada is the Southeast Asia representation, if I may put it. So if we really focus and look at the numbers, right, the core commerce section, if you look at China, it makes up a huge bulk of the entire profits of the business, how they drive revenue, etc. So in the commerce business, if you to split it up, they have two main or two main limbs of the business. One is called Taobao and one is called Tmall. So if you look at something that we are more familiar with, which is Taobao, Taobao is essentially like a C2C platform. Of course, not barring the fact that there are manufacturers on those platforms as well. But if you have to look at the underlying business model or the DNA of that platform, they actually don't charge you a specific commission, or they don't charge you by the GMV. So what they do is they focus a lot more in terms of marketing, advertising. So if I were to reflect back into the Singapore's context, you can think of it more of like a carousel, where if you say that, hey, today Anthony, I want to buy a spectacle from you, and you post it online on Carousel. Carousel don't take the money in between. So let's say you sell it to me for 100. They don't take 1% or 2% from this transaction. So if you go out, you meet up the person and you make that transaction. But on this case, what you can do as a seller in this case is really to maybe employ some of their marketing services or their SEO services, and how you can rank your different products. So that's the first part about Taobao. On the second part, which is Tmall, I think the focus here is really the authenticity and the legitimate, how legitimate those products are. So a lot of your household brands you see on Tmall, you have like Nike, or you have some of your more branded goods. Those people tend to go onto Tmall more. So this time round, they take an annual fee from the merchants itself. They kind of generate the revenue from a percentage of the GMV that they do help transact.
It seems as if there's a bit of a slowdown in growth, or the growth itself isn't fantastic in China, right?
I think that's more than fair. That's absolutely fair. I think based on the recent earnings call as well, it does show significant slowdowns. Maybe just to provide some context or some data points that I extracted out. I think, at least for now, the e-commerce CAGR, which is the compounded annual growth rate from 2021 to 2025, is actually expected to be around 11 to 12%. And in the recent quarter, right, Alibaba's China core commerce section only grew by 7%, and it was one of the lowest, I think, in the entire history of the company. Alibaba's management team actually do cite it or do attribute it to two main reasons. Number one is the slowing macro conditions. The core issue here is we have to corroborate it with the rest of the competitors, right? It doesn't make sense if Alibaba is the only one slowing down, but JD and Pinduoduo is still growing. So for that note, I think we can leave it aside first because JD and Pinduoduo will be reporting their earnings soon. I think the more important factor or the more important discussion is they actually do cite increased competition as well. And increased competition doesn't come only from JD or Pinduoduo because that's the usual culprit that we know, right? I think more importantly, there are also increase in live streaming platforms, so like your Kuaishou, your ByteDance, your Huya, your Douyu. So that's why it feels like Alibaba is currently feeling the heat, and they are engaging in some sort of quote-unquote price war to try to defend and try to expand their economic moat, if I may put it. So now, if you look at China commerce, is 7% a good number? Is it a bad number? I think we have to look at the context. So what are the competitors doing, and what is your growth in comparison to them? So one issue also is, at least in 2020, because of the pandemic, it actually pulled forward a lot of growth. So if you were to look at the 2021 GMV number compared to the 2020 GMV number, so GMV represents gross merchandise value. If you were to just compare the biggest event in China, which is the Singles Day, which is 11/11, right? The growth from 2020 to 2021 was lackluster for Alibaba at least. It was only probably a 10% growth. But from 2019 to 2020, I think they essentially grew more than 60%. Whether they can still maintain at least a 20 or 30%, which is probably still respectable. But if they start slowing down to maybe even single digits, high single digits, I think that's something that investors will get a little bit jittery about. Just a very simple, quick conclusion. The citations of the business management team, the two main concerns, macro plus competition, and also the margins are shrinking a little bit, at least probably in the next coming quarters as well, because of this trying to penetrate into some of the more lesser margin like streaming, C2M, groceries, etc. But I don't think this is a long-term problem, personally. So you can have your own opinion, of course.
It's just current investments. Okay. Then I think just now for e-com, you mentioned that they split out international as well.
Yeah, they have one more in Turkey. I think it's called Trendyol. I'm not really sure how.
It's okay. If it's in Turkish, none of us will pronounce it correctly. So let's just say they have something in Turkey.
Right. So, but I think still the bulk of it still revolves around Lazada. I think as a Singaporean or whoever that is in this region, the Lazada and Shopee war, if I may put it, it's incredible. I think Lazada actually had a head start. They were leading the entire region at first, but it seems like there was very little emphasis here. And Alibaba Group, as a company, wasn't really bothered about Southeast Asia. They were like, okay, you guys do your own thing. And then Shopee came in. They took everyone by a storm, and with all your Shopee PP ads.
That's terrible.
I think
thanks for the earworm.
Right. I think, but I do have to give credit to the Shopee's management team or the management execution wise. They managed to grow year on year. I think it's still at 100%. I don't really know how they're doing it, but of course there is this smaller base effect if you to compare to Alibaba's main business. But it's still, if you were to look at international commerce specifically, I think growth was quite I would say respectable. It's not like spectacular, but I think Lazada did around 51%, and Trendyol did around 49%, give or take. So that was still respectable amount. But then again, if you bring in competitors, I think Shopee did 80 to 100%. So that was why investors think that C Limited might be much more of a growth story in that case. Complacency aside, putting in a market position aside, at least for now, my own understanding is they recently actually made an announcement publicly that they have an ambitious goal of around 100 billion GMV goal for Lazada. And currently, I think it's sitting at around 20 odd billion. So that's a 4 to 5x from here. So they essentially
by when?
They didn't put a timeline on that. But if I'm not wrong, they didn't put a timeline on that. Yeah. That was basically their own quote-unquote commitment, if I can put it that way. But there was no timeline, so maybe there's no sense of urgency or whatever. But back to that network effect and back to the understanding of comparing apps, I just want to ask you personally though, Anthony, do you solely just use Shopee and you close the app, or do you do comparisons as well?
Actually, I delegate to my wife and she does it for me.
Oh, okay. So does she collect coins daily or something?
No, she doesn't. But I think, to be honest,
Right.
like I don't even have the Lazada app, and I get very irritated whenever I search for something and I want to buy something, and it gives me a Lazada link. I'm forced to download the app. But at least for my wife, she does go to Shopee first. I think it's again a bit of a Pareto principle, right? If they are cheaper most of the time, and even if they are more expensive, it's by $1 or $2. Why bother? I don't want to waste my time, figuring out everything. And I think we have had quite like some bad experience with like shipping with Lazada and like packages and all that. So it's like even if the price is a bit more expensive, so be it. I don't care, right? I want convenience. This is why e-commerce, right? I want convenience. I want the certainty of receiving it. I don't want to have to go and call customer service, go and dispute it. Right? So I think personal experience is that Shopee has probably served us better, but that's an anecdote, right? And it's not really data. So we will see. We'll see, I think.
Okay. I mean, maybe for me, when I personally use both apps, so even though me being a shareholder of Alibaba, I do look into Shopee and usually look into what are the price differences, etc. And when I consult my mom, when she's also an avid user of both, it seems like they are trending towards trying to make you a very localized customer. You're so reliant on the app that you want to do everything on there. But I also had the fair share of understanding from people that, hey, some of them are quite price sensitive. And if you're buying big ticket items, or you're doing bulk buying, or you want to go, I don't know, do a year's worth of buying or something, people might be a little bit more concerned with the differences in price. And sometimes it doesn't mean that Shopee offers the best in town or the best price in town. But that's also purely anecdotal. So in this case, I do look forward to how they're intending to grab back market share, at least in the Southeast Asia front. And all the different developments. I think Sea Limited is also kind of experiencing some sort of problems in India, trying to penetrate into the India market as well. So a lot of all these really depends on what your outlook of the company is, how you intend to look into how their projections are and what their growth rates in this season. But based on the number, like the percentages, 50%, 80%, 100%, it's quite incredible. I don't know where all these people are popping out from, but the company.
Yeah, you would think that after 2 years of COVID, everybody who has the Shopee app has a Shopee app, right?
Exactly.
Maybe it's increasing ARPU. I don't know. I haven't looked at the C financials also. But yeah, that's interesting. We shall see. I think, to me, my concern about the international side of Baba was essentially they had thrown away a lead, right? And it's new management now. I think they appointed somebody new late last year, if I'm not wrong. So yeah, maybe things have changed and then they are turning the ship around. But I think that's a concern, right? It's essentially a management team that needs to figure out what has gone wrong and how to fix it quite quickly, which is always something slightly difficult to do when you are already not a market leader. Okay. Anything else for international e-commerce?
I think for international commerce, we forgotten one point. I think was quite. We forgotten about the drop shipping bunch, the Alibaba.com. When you attend to all drop shipping courses, they always teach you go into Alibaba and then you try to find a niche product and then you try to resell it on Amazon or something. So I think on that part, they're still growing quite healthily. So in that case, I think nobody's able to replace the function of Alibaba.com in the worldwide arena. All the drop shippers or people that want to source for cheaper goods from China still rely on them heavily. So in that case, I think they are quite entrenched and the network effect is incredible there. So there's nothing to dispute there. So I think now Lazada and Trendyol is really more of a localized and let's see how the management is able to turn them around.
Okay, fair. Business segments, what else? Cloud, yes, right. What is the cloud market like in China? How's Baba doing there?
I think for Ali Cloud itself, they happen to be the market leader again. I don't know why. Maybe it's an execution thing.
First mover, I think.
Initially, they were quite strong. They came in quite strong. I think 50-odd%. I think now they actually plateaued down to around 30, 35, 38, around 40, that range.
Okay.
The next closest competitor is probably Huawei. I think it's sub 20% as well, around 18 to 19%. And then you have Tencent, which is also around 18 to 19%.
Yeah.
They actually did predicted that from 2020 to 2025, the cloud market outlook is supposedly going to 5x.
Yep.
So it's going to reach around 1 trillion renminbi in 2025. So that's the expected TAM, if I can put it, total addressable market in China. And but the numbers don't really, it's not really as encouraging as how they put it. A 5x in 5 years would probably mean that you need to grow on a CAGR of probably 70-80%, which is quite similar to the US counterparts. But then when you look at the numbers that they're posing, initially they were growing at around a 30-40% clip, which is quite promising at first, because maybe we thought that they might have to pick on into some economies of scale before they can start scaling up. But I think in the recent earnings, they only grew around 20% year on year. So 20% year on year, it was heavily affected by TikTok. I think TikTok, the ByteDance thing, because of China and US. So if you were to include TikTok back, I think it would probably have grown around 29% year on year. But this time around, they did 20%, and we have to face the numbers, because numbers don't lie. So in this case, it feels like, hey, is the cloud growth story gone? Or is there any issues in terms of how the growth rate is posing, at least in the near term? Because we always look long term, right, as investors. But I think the issue and the complaints are always the same. It feels like it's a general market thing that China is slowing down. Enterprises might be a little bit slow in terms of take-up rate, etc. But there seems to be a little bit more potential, at least in the eastern region, because they also recently just enacted or built two cloud operating centers or whatever in Korea and in Thailand. So that was the positive thing that came out from the earnings call, that they're intending to expand out into the Southeast Asia region rather than just solely focusing on capitalizing on China. There is a value proposition of Ali Cloud, because comparatively speaking, probably people might be more comfortable working with China. Maybe they offer a cheaper service. Maybe they don't require AWS or Azure or Google Cloud, for example. And fun fact, I think Malaysia's government is using Ali Cloud now to help them onboard a lot of their public cloud. I think it's true, at least for international branching out, in terms of getting enterprises or governments on board. It might be a little bit more challenging, especially when it's so politically driven. But at least I think locally, at least from my own discussions, or I've been following some Twitter accounts that are also quite, all those people or respondents or correspondents are all in China. It seems like there is an acceleration in terms of pickup rates, but it just happened to slow down, at least in the last 2 quarters, because of some of the more trickier issues that are happening locally in China. You have your energy shortage, or your quote-unquote crisis. You have your Lehman Brothers movement, etc., etc. Those were quite tricky on the ground, which also caused quite a little bit in terms of stalling, in terms of those transitions, and more importantly, the crackdowns as well. So there were pressures, and I would believe that a lot of the management team in China are quite fighting fire in that sense. They're not in the headspace or in the bandwidth of trying to think about business development.
So there's this whole crackdown, anti-competitive conduct, bad behavior. Yeah, so let's start with anti-competitive conduct, right? Because that can limit acquisitions, right? What's going on there?
But I think for those of you who have been following, right, I think it's proven that Alibaba was being anti-competitive in some of their business practices. So in this case, I think as shareholders, right, or as if you want to look at yourself as business owners, I think I do focus a lot more in terms of sustainability, in terms of growth, sustainability in terms of how you provide value, rather than this kind of short-term spikes. I can force everybody on my platform, and then I can grow like 20, 40, 50%, but it might not be sustainable in the event where suddenly the government takes it away and boom, there goes all your so-called quote-unquote competitive advantage.
Yep.
But those are not really advantage, because you're just exploiting your position. The government has, or at least not the government, at least from the private enterprises point of view, there is a need for companies to continue prospering. There is a need for all these shareholders to continue, but there has to be a certain degree of rule of law. There has to be a certain degree of managing all this entrepreneurship, ventures, developments in China by and large. So that's at least some of the if I can quote it, mitigating factors in the grander scheme of things. I think it's more of, are you providing that equivalent value when you are profiteering from all this so-called quote-unquote excessive profits? So what if you run root, and what if all this excessive profiting is not sustainable? So one good example is, N Group, right? When they're issuing out loans and doing out all these credits and stuff like that, right? The skin in the game was 3%. It's basically the bank's responsibility and the bank's risk. And I, as a platform, I'm just going to help you facilitate the growth. And based on what? Based on my so-called superior algorithm. Just trust me, because there's no official central credit rating system in China. Because they're not as matured as all the other different financial companies out there in the matured economies. It's sky-high valuation because of the insane amount of growth rates and stuff like that. But the problem is then, if you look at it, if you're creating fundamental risk to the economy, I'm definitely going to clamp down. Don't have to talk about China. I think in Singapore, we are even more stringent and even more prudent in terms of our financial system.
There's this whole, great power conflict, right? US-China. I don't know if that's seen as a macro tailwind, headwind. Or does it even matter, actually?
I think actually it does, and it matters a lot to my entire thesis, at least for people that are interested in buying Chinese companies.
Okay.
Recently, I'm reading a book, I think from Ray Dalio. He's talking about the changing world order.
Yep.
I think he also released a video, or YouTube video on his channel. Fun fact, he has a YouTube channel. But yeah, I think he managed to concise essence of his book in a 30-40 minute YouTube video. I feel like at least in the coming, I don't know, I can't put a timeline here because I really don't know when this conflict is going to end. It's probably not going to end. It's gonna increase the amount of friction, amount of tension, and it seems like we are just at the start of the curve. Because whenever an empire rises and another one is slowly deteriorating, the one that is on the throne will try at their level best to try to maintain their position, while at the one that's catching up will do whatever they can to catch up as well. But I think largely speaking, if you buy into Baba or Tencent or all your big tech companies or some of your Chinese companies, right, you are essentially betting that something is going to happen, maybe in your lifetime or in soon time to come. And that's going to have a re-rating, and there's going to be a lot of friction and pain in the short term. And that is something that you should be cognizant enough to study a little bit more about some of the different tensions. It seems like more and more countries are going to be more protectionist in nature. And that's going to be a very big headwind for a lot of the companies, not only Chinese companies, by the way.
Maybe we have slightly different views on whether the worst could happen. I probably agree with you that it's unlikely, but if the worst happens, there's going to be much, much more downside from now. So let's not put all our eggs in one basket, because the world is inherently uncertain, right? Whereas you have probably come to a different probability of the worst case scenario happening and going, oh yeah, then actually, you know what, that's fine, right? It probably won't happen, so I will probably make money.
I think also maybe just last point to add, right? In terms of this regulatory cycle, if you want, I can provide you with a picture. There is a study, I think, done by JP Morgan or something. The regulatory tightening it functions in cycle as well.
Yeah.
So in China, because it's such a huge country, there is really, I think it's nearly impossible for them to be constantly trying to be at the back of the companies and trying to hound them and trying to make sure that, I try to improve the system day by day and stuff like that. So I can provide, you can put it on I don't know where, but yeah, you can provide the resource in terms of that screenshot. Regulatory tightening is not a new thing in China. I think back in 2014, 2015, there is another cycle, or there was another repeat. But the peak of that regulatory tightening was not as intense as this time around, back in 2020 or 2021. So that is something that investors has to take into account as well. Because I would make that bold speculation that this is not the first time, it's not going to be the last time as well. So maybe after the regulatory tightening, they start easing out, 2022, 2023, they allow for all these companies to prosper, flourish, whatever.
Yep.
Then maybe, boom, in 2025, they come back again and then they start clamping down, they start tightening again. So in that case, right, then you'll see your share price get reacted, because a narrative actually, or price action actually do drive the narrative to a certain degree. I think we can all agree on that. So in that case, if it comes again, then you have to be comfortable with all the different volatility that you're exposed.
It's really about the macro for this company. It's not the business.
Right.
Okay, cool. I think that's it for today then. Thank you so much for your time. If people want to hear more about Alibaba, they can find you on YouTube. Just search Keng. Hey Coconut, so I hope you learned something useful today. I definitely did. But of course, whether or not to invest is always a personal decision. We are not here to tell you to do this, to do that, but are always happy to geek out with you about different interesting perspectives, companies, and trends for the future. This series definitely has a lot more depth. So if you have any feedback, ideas, or companies you would like us to cover, do drop us a line through our socials or email us at hello@thefinancialcoconut.com. See you next time.